Hey, everybody, welcome back. And here's the funny thing. Seattle home sellers are seeing their profit margins shrink amongst the housing market that we're seeing right now. And you're like, wait a second, what does that even mean? Does that mean our values are going down or is that my profit? What does that mean? Well, we're going to delve into some metrics. We're going to get into some of the other news that's happening to give you guys a really good idea where we stand nationally in the market. Hang on a second. All right. So a lot of things that we look at metric-wise as we go through each and every week, looking at what is our market doing, what's going on market, what's coming off market, where are we trending, how are mortgage rates affecting what the market is doing, and is it a buyer's market, is it a seller's market, is it a neutral market? What is going on so you can make the best business decision possible? Again, there's no cost, there's no advertising, there is no pre-recorded script. So yes, I do this, ad hoc, I wing it. It's not winging it, but anyway, so it's the good news. I know the information, and so because we track it every week, you get the benefit of that also. So let's pull this up. So this is an article by Joanne Drilling, and this was in the Puget Sound Business Journal. Said, hey, listen here, we got Seattle home sellers see profit margins decline amid housing market shift. And this is actually from ATTOM data, ATTOM. And it says national median profit margins for home sales has been declining almost every summer since 2022. Not unexpected, because that's when we also saw a lot of the interest rates. That's when the feds quit buying mortgage-backed securities and then actually, flooded the market with mortgage-backed securities that, your insurance companies, your investment companies are looking for guaranteed returns, retirement accounts, things like that. And including other countries that buy our debt as collateralizing, which was the agreement that came out of World War II that everybody is intermingling and interconnected, therefore less likely to want to create war on each other. So with that being said, that's what they were monitoring. That's what they started selling back, the feds, that is, into the market, flooded it. Mortgage rates went up almost to 8%. So that happened in late 2022. Right? All right. So if we come back, and it says, in Seattle, the profit margin has dropped by 9.7 percentage points over the last year. At 73.3% of the first quarter, the profit margin is still relatively high, 4.7%, higher than it was in 2020. But margins have been sliding since its peak at 109.5% of the profit margin. Margining, meaning that once you sell, what you actually receive. If I go down to the bottom section here, it says, hey, listen, the median home sold in the first quarter fetched $300,600 in profit. The lowest in 2 years, according to ATTOM. That's ATTOM data. The raw dollar value still makes Seattle the sixth most important profitable home selling market across the 128 metro market areas. So again, remember, I keep telling you guys that our market is a little bit different. We sit in a very, I'm going to say, unique situation. Typically, we're in the top 5. ATTOM says for profit margin, we're number 6. We're still consistent with that. So then it delves into what's going on nationally, because there's a lot of news out there on the market. What's going on? Hey, it's doom and gloom this week. Hey, we're doing good this week. Hey, we're we're going to be 2008 worse than that with some of them. What's Seattle? What's the east side? What's South King, Pierce, Kitsap counties? What are they doing as far as a market? Well, let's delve into that one, because here we have another headline for you, and it says the housing market may be on the cusp of a revival. It says housing prices are at record high, mortgage rates won't budge, biggest problem, but indications of a recovery are emerging. That is absolutely correct. And we've never really, we're soft right now, okay? It's not a buyer's market, it's not a seller's market. We're smack dab in the middle at about 2.8 months of inventory. Interest rates have been coming down, tinking down every little bit for the last 30 days, 3 weeks, 30 days. Although this last one, we had a little bit of new tariffs. It's kind of scared the stock market, which controls mortgage rates. So mortgage rates went back up as the bond values dropped down a little bit. But that'll change and we'll get something a little bit better. So if we open up this one, it says Fannie and Freddie now accepting a Vantage score 4.0 for mortgage underwriting. And you're like, what? What's Vantage score 4.0? So funny enough, with some borrowers that don't have credit, whether you're new to the country, maybe you're like my nephew where you've never owned anything, you've never really rented, things like that. So you don't have a credit score. So we build credit scores based on rental payments, based on utilities, things like that, that allow you to get some form of a credit score, because that is required for lending criteria. Freddie, Fannie, FHA, VA, USDA, doesn't matter. They require a credit score. To get that, you have to have some credit worthiness. What they're saying is, hey, now officially, even though they were doing it in the past, there's ways of making that happen. We're officially saying, hey, we are good to go. They can use rent. So if you are timely with your rent and your utility bills and you are not delinquent in those and haven't been your 30, 60, 90-day lates, that can be used to help build a credit score. That's what that is saying. So for first-time home buyers, that is excellent. If you are somebody who doesn't, like I have a friend, Steve, he always paid cash for everything. Made gobs and gobs of dollars, but he paid cash for everything. Didn't have a credit score. And he and I used to laugh about it because, dude, man, you just buy this building anyway. But so the point was that we would be able to build this credit score using rent and utilities, and that got us over over the hump. So it's not new, but now it is formalized that this is something that is definitely can be used, and it isn't something that is more of an exception. All right, moving on. All right, so if we take a look at our next headline here. Let's see, mortgage applications pop as rates fall into the 3-month low. 100% agree with this one. Our rates went down to as low as 6.5. They bought back up again on Friday. A lot of this was based on the fact that we had some little tariff activity, that not tariffs from countries like Brazil and Canada and whatnot. And that came into play. And so, of course, the stock market reacted, I would say, negatively. Rates actually went up, bonds came down. So that's what was happening there, and not unexpected in any way. When we take a look at, here's something super important for a lot of folks, and here it is. U.S. commissions jumped 5.44%, and they're like, what? How is that possible? We're hearing that commissions are way down. Okay, so since 2019, our commissions in the Northwest Multiple Listing Service, sellers have not had to pay a commission to a buyer's broker. But sellers are super freaking smart. They know that if they want to ease the barrier of bringing in a qualified buyer to a lesser agent, maybe that they cannot control or does not know how to negotiate their commission very well, okay? They reduce that barrier, and therefore they can actually offer a buyer brokerage compensation, keeps it super simple, and it's business as usual. Now that's super nice. Now, for a seller, does that make sense? Hey, listen, you have 3 choices as a seller. You can choose not to pay a commission at all. You can say, hey, I want you to throw the commission in to the offer that you present, or here, I'm going to offer you this commission. The benefit of, hey, I'm going to offer you this commission, you can control what that expense is. And without diving into some of our metrics that we have tracked since 2019, I will say that is a great way to control expense, especially if you're dealing with a really good agent versus a lesser agent, okay? If you're dealing with me, it's going to cost you more because I'm better at negotiating. I'm better at what I do than the average agent out there in my entire team. I'm not trying to say that to inflate things. I'm just saying a fact. All right. So moving on, if we bring this back, it says even on a nationwide level, agents are becoming more important. And that is because as as it becomes more difficult to sell your home online or not, out in the general public, but more importantly, as you're needing better information, you need somebody solid to negotiate. That is where this comes into play. And that's why those fees are becoming a little bit more. Okay. Anyway, we take a look at some of our other headlines. We have a big jump in mortgage rates. Yes. Why? Because mortgage rates have been coming down 3 weeks, which is the barrier right now for a lot of buyers. And we've had quite a bit of activity. New home sales dropped to a lower end. New home meaning new construction. They're starting to continue just do their little pullback as they're forecasting what's going on. You can see we went from about 6.52 to 6.79. As you see our little bump. Not unexpected. And then Bank of America reports that the size of new homes is shrinking despite rising costs. And that was an interesting report that they had because they're talking about the physical home size versus the land, what people need. And sometimes those numbers just don't quite match up for what people want versus what they can afford. And affordability is really the biggest barrier with interest rates being that big hinge point. But rates between 6 and 7%, so typically normal. Okay. Some people have asked, George, are we going to see 3% rates again? The answer is no. The Fed's artificially bought that down. I don't see them spending, $2 trillion, $3 trillion buying mortgage-backed securities again that, in a year and a half that they flood the market with and drive mortgage rates, from, 4.5 all the way up to almost 8%, right? That doesn't make a lot of sense. So I think they're going to do situation normal, just like, the meeting with the Feds in July. They're not going to do any rate change. They're going to keep situation normal. Probably not until September. We might see a Fed drop in rate, which means mortgage rates will more than likely go up proportionally. Just saying. More than willing to have a conversation with anybody about that. Hey, let's talk about the Feds. All right, Freddie Mac. Look at that, 6.72. Look, we're down year over year. We're down for the week. And as you can see, we did have our little tiny uptick. Absolutely situation normal based on what we saw. So when we talk about what's going on with the metrics in the Northwest MLS, well, the good news is, hey, listen, to put your home on market, market times today versus this time last year, heck, we were only 4 days apart. Pretty small potatoes, right? When we talk about selling at 101% of list price a year ago, we're at 99% of list price today. That's not unexpected. Why? A lot of that is interest rates. When we talk about at the bottom, you can see our sales percentage ratios there in the metrics. If we take a look at the running 7-day average of what's going on market, listen, on Friday, we had a massive bump. We're the post-July 4th, part of the vacation trifecta between now and the middle towards end of August. That is going to be when the buyers are the most aggressive. They're going to want to get into their homes. They've acclimated to the summer. They've been outside. Now it's like, hey, let's change our focus again. Let's get back into buying a home. We got to secure a home before kids go back to school. Whatever it is. Hey, interest rates have been coming down. Whatever that is, we normally see a very aggressive activity between now and about this, the middle to the third week in August. And then it changes, slows down again, last minute vacation, kids getting back in school, people transitioning for, when the snow flies, and then that'll pick up again end of September, first part of October, and will spurt until about December. Normal cycles happen almost every single year, except for in 2020 and 2021, where you're supposed to be at home. And of course, nobody was. So when we come back here and we look at this, so on Wednesday, there were only 780 homes on the average of the last 7 days to give you guys an idea of that switch. We were still at about 1,050 homes that went pending. And so our inventory levels, when we take a look at them, right? Again, super accurate information. Dial in every single week, guys. It's free. And it just helps you make really good decisions. All right. So when we take a look at our numbers here, the center column here, in fact, let me blow this up for you. Hang on. All right, there we go. Bottom chart. Listen to that. So our solds are off about 124 homes, but we have 338 more pended for the month of July. And of course, this is, looking at to the 11th. So when we take a look at this, we have 338 more homes up to this point in July, which will surpass the 124 that we are lagging. When you look at the top chart there, look, we're up 1.3% on our sales. We're up 2.1% more pended year to date. And including, we have really good, as far as appreciation, we're not skyrocketing up, but we're definitely a little bit more flat. Okay. We're definitely not going down, but we're definitely, like that 1% on the treadmill. For those that have a treadmill, get on a treadmill, hang their clothes on a treadmill. Anyway, so we're at that 1.5%. And so if we take a look at it on a different side of things, so right now for the month of July, it's down about 2.6% or about $23,000 less. What that means is homes are selling, the average home sales price for the Northwest MLS is, for single family only, $23,000 less this year than it was at this time last year. However, we're up 1.1% on the other side, roughly about $10,000. Now, why is that important? Again, that's because we're heading in that just very gradual upward direction. No earth-shattering records. We are very straightforward. We're just keeping this thing rolling forward. We're not going down. No land speed records unless we see interest rates get down into the 6.25. If we get down to 6.25, watch out. I think it's going to go absolutely crazy. All right. Okay. So when we head over, let's take a look at new construction, right? As you can see what we circled there, our inventory is heading in a slight downward trend. As you can see here, year to date and our same month over month. If we blow this up, bottom chart, look, we're off 63 homes for the month of July, off on 10. We got 10 more pended than we did this time last year. But you know what? Their sales and their pended, when you look at the top chart, super consistent. We've been that way for about 4 months, just lobbying on these numbers, slowly improving. We have been seeing some plat improvements as far as prices go. We've seen, some existing or what we call finished homes with move-in specials, red tag sales, and they're wanting to get that product off month end. Month end is a great time for a buyer to go out and negotiate really good terms, not necessarily on price. There's other things you can negotiate which affect how much you pay monthly and things like that, additional amenities to a home, different options for you to consider, which are really worthwhile taking a look at. All right. Okay. So if we then let's move over to our, hang on a second, let's blow this up here. All right. We take a look at pricing. Okay. Funny enough, pricing is up 1.4% year over year. Okay. The however is when you take a look at the month to date, we're down just a little bit, roughly about 55,000, a little over 55,000, almost $60,000 average sales price. Not unexpected. There's with more new homes or resales on market, builders get a lot more competition. That's why you're seeing some really good opportunities out there right now. Okay, so let's head over to the bank-owned home. We'll button this up and let you guys go. Here we go. Bank-owned homes. Again, super limited. But look at these numbers. Remember, just like all of the new construction, just like all of the existing homes, listen, when you take a small number and double it like this, hey, last year they had 6 solds. This year they have 14. For the month of July, that's 8 home difference. Oh my gosh, that's 133%. Oh my gosh, what's happening? That's what your government is trying to get you to buy into, that we have these massive issues, why we need to provide a lot of socialistic benefits to people for very small numbers. Do not fall into that trap. Definitely challenge people and make sure that they are spending your money wisely down at Olympia. When we talk about actual sales, look, foreclosures, you can tell right there, the numbers are nominal. Very few issues out there. If you have any questions, reach out. Please post your comments down below. Smash that subscribe button for me. Let me know that you like what you're saying, or at least leave a comment of what you think or ask a good question. In the meantime, absolutely beautiful weekend. I'll see you on the next video. Have a great day. Take care.